morning, everyone. So we have tax credits on our personal tax returns each year, but that does not mean that you need to claim those tax credits in that year. Some credits can be transferred and claimed in other years, okay? Some examples of that are medical expenses, okay? So medical expenses only have to be claimed in the period that needs to be claimed has to end in the tax year that you're doing, which means that technically you can go from January 2nd of 2023 to January 1st of 2024, essentially the entire year of 2023, and claim that on your 2024 tax return. Okay, so you're looking at the dates of the receipts. So like if you had a really expensive medical procedure done, let's say you had some dental work done in December of 2023 and you had some dental work done in January of 2024, and both of those may not be able to be claimed on either tax return, but you can combine them on one tax return and get more of a tax credit. Okay, that's legit. Other ones like RRSPs, okay, if you contribute to an RRSP in a year that you don't have a significant amount of income, and you know that the next year you're going to have a significant amount of income, you can override that RRSP claim and claim it in the next year. You still have to put the RRSPs on the proper year and do the proper carry forward, or the CRA will reassess you, which I don't technically agree with, but that's the rules. And another example that I ran into last night was a client of ours made some hefty donations, okay? And they do not have enough income this year to completely utilize all the tax credit, okay? So what I did was I separated their donations between the husband and wife so we can have an even carry forward, because their income is very similar each year, and brought the tax payable for the federal down to 0, and then I left it there. Okay, so that means that I still have credits for those clients to use in future years. Now, there's other things that matter when it comes to using those credits, which is, is their income actually going to increase in the future? Are they going to make hefty donations every single year? Maybe. But as it stands right now, they were only going to see a 21% savings on those donations, when it should be 21% federal, 21% Alberta, and 29% federal. So it should be closer to 50%. Okay. So those donations that I held back, we're going to get an extra 29% out of that if we claim those. Now, there is a limitation on donations. Donations have to be claimed within 5 years. So there is that limitation. And we'll make sure that in year 4 or 5, if those donations are still kicking around, or some other ones have come in that are still kicking around, that we can then use them all, even at a lower rate, or whatever we have to do. But the point is, when you have tax credits, they don't necessarily need to be claimed and deducted in the year that they happen, okay? And the only way to know what those rules are is to actually look it up, do some reading, or get a seasoned professional to take a look at your tax situation and make sure you're getting all the money that you can potentially get. Okay, so I hope that helps. Take care of yourself, take care of your family, take care of your friends, and be well. Hey, thanks for watching. If you enjoyed this video, consider subscribing to our YouTube channel. You can also follow us on Facebook, Twitter, Instagram, and TikTok, all of which are linked in the description below. We're more than just an accounting firm. We do business consulting and media creation for our small businesses. Consider checking us out. It would really mean a lot. Hope to see you soon.